Hello, trading is closed on December 20th, 2022. Let's do our disclaimer, go over our calls, and make some predictions for tomorrow. It's my trading plan for Wednesday, 12/21/22. Remember, I can be completely wrong. Any trade you make should be at your own risk. Look for the pattern with the early high, that's this. Tomorrow should have the early low. We said unless we gap down smartly, we had some price targets, 38, 34, 55, and 38, 26, 92. We gapped down smartly, so the time for these targets to print is off the table, but not the price. It's not a prediction that they wouldn't print today. We just say we don't know when they will. Well, they printed today, so we don't get to add them to the list. During the day, MEJT said ultimately lower price would print. It identified this rally as a false move. It's retraced. Identified this drop as false. That's retraced. Here it said ultimately we'd see lower prices. That meant this rally was false and we saw the lower prices. So that's played out. We had been closing under the lower Bollinger Band. We've now closed over it. That can be a sign of sellers being spent. We gapped down, hit a lower low, closed over all the intraday lows. And there were quite a few of them. 1, 2, 3, 4, 5, 6, 7 intraday lows. But not only do we close over all those intraday lows, we also closed under the low, closed over the low. I should say, well, if I said over or under, we closed over all these lows. We even closed over the low we hit just before noon Eastern time yesterday. Now you may think 4 cents might not mean much, but it actually means a lot. It means for over a day and a half the market's actually up. It can be interpreted as a rejection of these lows. And when you're dropping, you want to see lower highs, lower lows. We're no longer seeing lower lows. When you're rallying, you want to see higher lows and higher highs. We're seeing the higher lows. We need confirmation by seeing some higher highs. And if we get that, it can be a sign of a turn in the stock market. We had a few targets. One was to hit this gray line. We didn't gap under it. We hit the line today, so that target's been satisfied. I still think we should go back to this green line. And we have a new target. We ignore this, connect these things. The magenta line gets hit today. So if we're going to, so either you gap under that line, which means gapping under today's low, or the line wins, which means if we trade under this line without gapping under it, I don't think it'll stick. Here's where we are. This is a 50% retrace of the rally. That's 50%. And in addition to this trend line support, you've got Fibonacci support, plus a possible rejection of these lows. Here's where I'm counting this. 5 waves down. Since then, I'm counting this as A. I'm counting this symmetrical triangle as a B. And if that's the right count, and if black C is equal to black A, it'll put us in the 3860s. Doesn't mean it's the right count. Doesn't mean it's the only place for wave black C to end. But this is certainly compatible with moving up smartly at tomorrow's open, right from the open and going up. Now, this is the time of year when selling tends to dry up and prices rally. People who have a gain for the year know they can delay paying taxes on the gain if they push it off into 2023. People who've taken losses for the year know they can't take any more deductions for this year. So they have less of an incentive. If they've taken all they're entitled to, there's a limit in the U.S. about how many deductions you can take for losses. So they have less incentive to sell this year. They're more inclined to stick it out. So selling tends to dry up around this time. And when selling dries up and you have fib support, trendline support, and a possible rejection of the low, it's a good setup for a recovery tomorrow and moving up right from the open. Doesn't mean it's the only way it has to play out, though. We won't know that until tomorrow, but I'd say there's a good chance that we see that if that counts right, which we don't know yet. Wednesday's pattern has a early low. We could still gap up. Typically, it's a rally day with a high in the final hour. If it's weak, more weakness should follow in the days to come. The gap down hit a lower low but closed over intraday lows. So if this is maintained at tomorrow's open, we should see higher prices regardless of where we close. There's trend line and fib support at the low of day, so it's very plausible that we maintain today's low. Hitting a new trend low, but closing positive, which will happen today, can be interpreted as a rejection of that low. And if we gap up tomorrow, hasn't happened yet, but if we do, that's confirmation of a low here. If instead we gap under the low of day, that breaks support, and that could certainly happen. But if we don't, I think we'll trade higher regardless of how we close. We have a chance to stem this decline right here by moving up smartly right from the open. And if we do, let's not forget we have that green line as a target. It's a pattern with the early low. Tends to be a rally day. I think that's what we'll see. But everything does a UE if we gap under this low, because that's a major break of support. So we'll have to see how we open tomorrow. The pattern's positive. The rejection of the low is positive. We've got a good chance to reverse some of this drop tomorrow. And that's today's call.